Hi guys. So today we will be discussing about taxable and non-taxable income. Let me share my screen. So first and foremost is what we need to calculate the whatever income you have earned or the taxpayer have earned, how much income will be taxable and how much will be non-taxable. So almost all income is generally taxable except some specific exclusions. So first thing that we need to determine is gross income. Now, gross income includes all type of wages an individual can earn, like wages, salaries, commissions, tips, self-employed income, then fringe benefits from the employers, then interests, dividend, capital gain, and so on. So first we will calculate the gross income, adding all the income that the taxpayer have earned, and then we will determine adjusted gross income. That means we there are certain deductions allowed which we can adjust with the gross income to reduce your taxable income, which includes like IRA contribution. IRA contribution is like a retirement benefit, like a PF over here. Then self-employment tax deduction is exemption is there. 50% of the self-employment tax you can claim as a deduction. Then student loan interest. If you have a loan on for the education, then interest you can deduct from your taxable income or gross income. Then early withdrawal penalty is there. Okay, and many more. We will discuss all of these in different sessions. So once AGI is calculated by deducting the adjustments uh, from the gross income, then you get the you have certain more deductions available like standard deduction, itemized deduction, and qualified business income deduction. So once you deduct all of these from AGI, you get taxable income, on which you multiply it with the tax rate using the slab rates, and you get the tax liability, from which you subtract the tax credits available and the tax payments made earlier, like the estimated tax payments, to get the actual tax due or refund. Okay. So we will be discussing one by one all of these in detail, but this is what the taxable income is all about. Now, few things you need to keep in mind about income uh, before we go deep into it is that income is divided into earned income and unearned income. So earned income is something like you have earned with your hardcore efforts, like say salaries and wages. You have to do work to earn this kind of income, salaries and wages, self-employment income, tips, professional fees, right? So you have to work to earn this. On the other side, unearned income are those kind of sitting income. Like you don't have to work, still you get these income, like portfolio income. Portfolio income includes uh, interest, dividend, capital gain, or passive income. Passive income is like royalty, rent, or any income from partnership firm or S corporation, which we call as pass-through entity income, where you are not actively participating. Okay. So, why we need to bifurcate between earned income and unearned income is earned income is subject to FICA taxes also. Along with income taxes, there is a payroll tax. We call it as FICA tax, which is Federal Insurance Corporation Act tax, where we have two types of taxes: Social Security tax and Medicare tax. Right. So, 6.2% of Social Security as employee portion and 6.2% as employer portion needs to be paid. For Medicare, it is 1.45% and 1.45%. Again, we will discuss in detail, but for now, earned income is subject to FICA taxes, Social Security, and Medicare, whereas unearned income are not subject to FICA taxes.